Yesterday's breather or a bit of a pause in our own markets where that stupendous rally came to a grinding halt. There's lots to focus on when it comes from news across the globe, and in particular with the US FOMC meet. And the highlights of that overnight was that the Fed chair seemed to have indicated that the confidence is continuing over easing inflation as well as the labor market strength. And there is a unanimous vote for reducing rates to 4.5 to 4.75%. That's going to be the range. So further rate cuts are definitely likely. There's no clarity when it comes to the quantum or the timeline, and there are a number of factors that are going to put downward pressure on inflation. But as of now, there's no signs of rapid deterioration in the labor market. So how have the global markets then reacted to all the news bits coming in from across the globe? Well, you did have a fairly decent rally that we saw. Stock futures seem to be a little changed on Wall Street, so a rally playing out across the board. But for the Asian markets, it's a bit mixed, with the Nikkei and the Shanghai indicating a bit of a downward tick. There's also the China industrial profits. Nikunj, just going by the kind of commentary that we've gotten in from the FOMC, rate cuts are likely, no clarity on quantity and time.
When a Fed meeting is there, everything is somehow centered around Fed, but trust me, that's a sideshow.
Yeah,
there are a lot of other factors
moving,
which are at play right now, which in a sense are really important for the market rhythm. What really matters to me is not the global setup. I'm talking about the moot point here. What really matters to me, if you're a trader, is that are we likely to see incremental built up after 3 days of a smart gain? We had a monster rally on Friday, a great Monday, a smart Tuesday. When I say I'm talking about not the benchmark indices, I'm talking about the tone and the tonality of the market. Are we likely to see some follow up on Wednesday? I think frankly that in a sense really is the moving point right now, because Fed interest rates, they are important, they are crucial, they are relevant, but that is unlikely to influence the script of how markets are likely to move in the month of December. That's one part of the story. Second part of the story, let's really look at where markets are. What is this? Adani Group. No bribery charges against Gautam Adani, Sagar Adani, Vineet Jain, and as per the DOJ indictment. So this is something which is coming on the exchange. No bribery charges against Gautam Adani, Sagar Adani, Vineet Jain as per DOJ indictment. So the Adani Group in a sense has informed the stock exchanges that their understanding of the fine print, where the group and some of the senior members of the Adani Group who were accused of a bribery, this is not coming from the US court. This is Adani's in a sense, what they're sharing with the exchanges as to what their understanding of this whole episode is. Now, we'll try and get some lawyers before we jump to any kind of a conclusion, just to establish that what it means, because this is a formal communication which has come from the Adani Group and they've already informed the stock exchanges. So, is there a twist in the tail? Was the understanding of the market wrong? Is this Adani side of the story? What is the reality? We'll stay with the story. We will take the story forward. But to go back to the market, October, November and December, I think there would be a striking difference in the way how the month of October has moved versus how the month of November has moved and what we should expect in the month of December. November and October was all about news. It was all about earnings. It was centered around elections. December, that factor is not at play. FIIs thankfully have stopped selling. News flow has dried up. Markets in a sense are no longer expensive, and sometimes no news is good news. So for me, the tagline for the month of December is no news is good news, and that is something which in a sense could be the differentiating factor for the month of December.
Okay, that's going to be some of the defining factors that we'll be watching out for. But let's also track our own markets. And yes, indeed, we did take a bit of a breather after that rally that we witnessed. So 24,200 is where we settled in at for the frontline index, just a smidge below that level. The broader markets, actually, in comparison, it was the small cap end of the market that did manage to hold its ground. So you did see a smart gain coming through. In terms of individual sectors, auto took a bit of a backseat. Power stocks as well were in the red, while IT was really on its own trajectory, hitting a record high. So you did see traction building up in all the frontline IT names across the board. Nikunj, just going by the kind of momentum that we've been seeing, the fact that we did see a bit of a pause, but the broader end of the market managed to hold out.
So Aman, it's a good comeback, and that is what you want to see. You don't want to see, after such a sharp fall, you want to see first you want to see a recovery, and then you want to see consolidation. That is classic. That is classic, and that's healthy. Again, I go back to that same point, that why I feel confident that December would be strikingly different from the month of November or October. October was all about earnings and festival demand and disappointment, which came at least on the economy front. November was all about realignment of the world after the US election. December could be completely different. Bulk of the calendar events, they are behind us. There is no update on the global front. Whatever we had to hear from Fed, you pretty much have heard in terms of communication. Third, local elections and global elections, that adjustment is behind us. Fourth, government spending, which in a sense had slowed down, that is likely to pick up. At least we will see evidence of that. The China trade, which in a sense shook everybody in the month of October and November, that has petered away. So sometimes no news is good news, and that is what I would like to really use as the tagline for the month of November. No news is good news, and you should brace yourselves for a healthy December. Healthy does not mean that you will make a new high. Healthy does not mean that we are in for a rara rally. Healthy means that you will see consolidation in some stocks, recovery in some stocks, and hopefully a decline should get arrested in a larger part of the market.
If you like this video, then like, share and subscribe to ET Now.